Silver broke through 30 just as last week. Silver report was being published and we went to about 32.50 or whatever it was. I don't remember. Now we're back to about 30.60, 30.70, and oh no, silver's down again. But we're going to have to see if the new support is the silver squeeze high of 2021, and it looks like it might be. If it is, then we could be on the road to 50. I don't know how long that road will take, but if we can hold support at the silver squeeze top, then yeah, we're in pretty good shape, and so far so good, though it's still early days in this new support zone.
In today's market recap, the silver price plunges below $31 amid Fed's hawkish minutes. Silver drops more than 3.50% after hitting a daily high of $32.19. Fed's hawkish minutes prompt profit-taking in precious metals, impacting gold and silver. Silver price tumbled more than 3.50% during the North American session after the Federal Reserve revealed hawkish, tilted minutes that showed some officials would like to raise rates if inflation warranted it. Therefore, precious metals like gold and silver trimmed some of the weekly gains. Technical outlook. Silver's uptrend remains intact, but due to the speed and strength of the move, the gray metal was subject to a mean reversion move. The buyer's momentum has faded as the relative strength index was overbought and punched below the 70 level, hinting sellers to step in. With that said, first support would be the $30 psychological level. On further weakness, the next floor level would be the April 12th high turn support at $29.79, followed by $29. Now we'll show you the best excerpts of the latest interview, but first smash the subscribe button, hit the like button, and turn on notifications so you don't miss out our daily recaps. Enjoy the episode.
And look at this. We're at an interesting technical resistance here. Let's see if we can break through 6, because what is 6? 6 is the support during the 2020 and 2021 silver squeeze explosion in silver prices. That was support here. If we can break this support, we can go back into this trading range. Maybe we'll see. It might take some time. It's not going to break through it immediately, but FSM is in great shape, and I think so are its shareholders who bought anywhere in this area over here. And even those who bought over here and averaged down are also in great shape. And even those who only bought here in the silver frenzy of 2020 and 2021 around silver squeeze, we are about break even, or we will be pretty soon. So no matter where you got in here, you're either in okay shape or very good shape. But anyway, I digress. Let us return to this week's silver report, brought to you by Fortuna Silver Mines, symbol FSM. The first thing I wanted to go into today is the murmurings about Chinese premia or premiums. I don't know what the technical pluralization of that word is, but premia sounds more sophisticated and cool, so I'll use that. So we have here a chart that I jiggered from Gold Charts R Us with my signature rectangles put in place here. Here is the Chinese premium over COMEX and silver on the top here. And yeah, we're about 10%, 9.44%. This is, I think, a chart from yesterday or 2 days ago, so it might be a little bit different now. And it's 3 days old by the time you're looking at this, so unless something crazy happened, it's around these numbers. Let's just say 10%. Has it been here before? Yeah, it has. It is pretty high. That's true. And it rarely gets here. And it is here at 10%. And that is significant. But I don't see any correlation between high premiums or premia in the silver price in China or Shanghai over COMEX and silver prices. Here in this rectangle, we have a discount, right? 4% discount and high silver price. Here we have high premiums and low silver price. Here we have high premiums and low silver price. Here we have high premiums and a crash in the silver price. I don't see any pattern here. There might be a pattern, I'm just not seeing it. But I do see something significant with Chinese premiums that is more global and broad-based and macro speaking, even though I don't like that word macro because it reminds me of macroeconomics, which is a bunch of crap. And what is that correlation? Well, let's first mention here that the yen is back at 157 per dollar. We are back at the final support zone, or sorry, resistance. It depends if you want to flip the chart or not. It's the weak support zone for the yen at about 159, 160. The numbers are not exact here. Here's the high from 1990 when the Japanese stock market hit its all-time high of 159.83 in the yen to the dollar, and we hit like 160.3 or something in April 30th or May 1st or whenever it was, which also happened to be the year of the silver top, the date of the silver top in 2011. I think it was either April 30th or May 1st or 2nd or something like that. Think about this. The yen is back at 157 after a big Bank of Japan intervention on April 30th. And now 3 weeks later, we're back at the very weak zone in that final resistance zone from 1990. And what does this mean? That means the yen is very weak. That means its trading partners in Asia are going to be pressured to devalue their currency so they can bring their imports and exports back into line. Because if the yen gets too weak, then trade balances and trade imbalances really, start to go out of whack. And other countries and their trading partners in Asia do not like this. So that was what we saw during the Asian financial crisis, which began in July. I think July 2nd or July 3rd is the consensus. I love that word, consensus, because it's the only thing that matters, of course. So in July 1997, it was the Thailand baht that was devalued. That was the first shot in the Asian financial crisis. And this here is a chart of silver, right? Starting from the devaluation of the baht in Thailand. So we have July. That was when silver hit a low of, what was it, around $4 and something or even less. And here we have a high of about 740. So almost a doubling of silver during the Asian financial crisis here as Asian finances were deteriorating. And are we going to see the same thing? I think we will, because if you have competitive devaluations of currencies, then real money obviously becomes more valuable as fake money or money derivatives become less valuable. If this starts in Asia, so be it. And the weaker the yen gets, the closer.
Commerzbank's silver and gold price predictions for end of 2024 and beyond. In the report released today, Commerzbank has revised its forecasts for silver and gold prices, offering insights into the precious metals market for the end of 2024 and beyond. While silver sees an upward trajectory, the bank anticipates a decline in gold prices in the second half of 2024. Commerzbank's latest report includes updated forecasts for silver and gold prices. Notably, the bank has raised its projections for silver prices for both the end of 2024 and 2025. The revised forecast places the ounce silver price at $30 by the end of 2024, up from the previous estimate of $29 for the end of 2025. Now expects silver to reach $32 compared to the previous forecast of $31. Conversely, Commerzbank foresees a decline in the ounce gold price in the second half of 2024. The bank predicts that gold prices will drop to $2,300 during this period. Now we'll show you more clips of the latest interview. Like and subscribe if you find value here, and let's get back into the episode.
And this is a technical chart of silver. You've seen it before. I put the crosshair here at the silver squeeze high, which we see at $30.35. The question here is silver squeeze, the first silver squeeze that got us all excited for good reason, is that the new support? Is the silver squeeze high the new support? If it is, we're in very, very good shape. Well, so far, it seems to be that way. We were above 30.35. I don't know exactly where we're going to be by the time you're watching this. If we break slightly below it, it's not exact numbers. You can break slightly below it and try to scare out some sell stops. But so far, we're above it, and it looks good so far. We'll see if this holds. If it does, I am very excited. Silver in real terms, right? Hitting final resistance now. We're focused on 30. I understand 30. I'm also focused on 30, but there is something more important than 30 going on in the silver market in dollar terms, and it is the silver to commodities ratio, which the final resistance is at whatever this line is, 0.1111. That's a good number. That's a very unitary number. I think it's like 1/9 if you make it into a fraction. So we have a triple top here, and I'm kind of cutting this out because this is the naturally occurring non-lab created virus lockdown insanity pricing of silver versus commodities. This was a real monetary panic. We will get back up here, but not immediately. We have to overcome this triple top first from before the insanity of the that non-lab created virus thing. So we have a top here, a top here, a top here. We got to break through this, and we will. This, I think, is more important than $30 per ounce. This shows the actual bullishness in silver itself rather than in commodities, generally with silver as a reflection of commodities. To the gold to silver ratio, I'm going to show you a quick technical chart here with support and resistance. And then talk about for a second of George Gammon's trip to Argentina, the land of silver, where I did a video critiquing it. I like the video a lot, and it is valuable to go to a place like Argentina to see what's actually happening. You can see the video on his channel and my response to it on my channel. So here we have the resistance or support. What is it? Resistance, let's just say, in the gold to silver ratio at 76 about. And this has been resistance since 2022. We got to get below here. We got to get to about 65. And 65 was the point where we hit a 30-to-1 ratio in the 2011 top. And about George Gammon's video, so he went to Argentina and I checked what's happening with SLV holdings. And on this 6-month chart, the blue is the silver price, the black are the SLV holdings. You see like these wild swings in the SLV holdings that have nothing to do at all with the price. Normally, if retail traders are chasing the silver price, they go together, the price of SLV and the holdings of SLV, but this is not happening anymore. There's just like these crazy swings. I think it's shorting and short covering or something happening with the participant banks in the fund. There's a whole bunch of weird shenanigans going up on an SLV, and it shows you that the retailers are still not interested in chasing silver here. And we see that in the premiums too. Premiums are low. I think junk silver is at 9% or 8% premium, something very.
What do you think of Rafi's take? Will silver continue going higher, or are we already too high? Post in the comments section down below your honest opinion, and feel free to congratulate all gold and silver stackers who are winning as we speak. Now watch this video right here because it's a perfect fit for you. I see you on the other side.